So fascinating polling results from NBC News and Wall Street Journal. 17% of respondents to a Wall Street Journal NBC News poll say they are paying less in taxes. 28% say they're paying more. The actual numbers, 48% of households are getting a tax cut under the Republican bill. Why do people think they are not paying less taxes? Because their tax refunds are smaller. Here to talk me through this, founder and owner of Desnoyers CPA, is Lydia Desnoyers. Lydia, welcome back to WHO Radio in Des Moines. Good morning to you.
Thanks for having me, Jeff. How are you?
I am doing great. So, Lydia, are you finding this? Are you sending back people their tax returns and saying, here's your refund, and they go, well, wait a minute, this is not as much money. Are you having that experience?
Yes, the response is, that's it?
That's it?
That's it? and then at that point, I'm like, I'm so sorry, but I'm just a messenger.
Right.
But, yeah, that seems to be the case for many people this year. There are some people who are happier this year, but for the most part, some people were expecting higher refunds. But the reason that they're not seeing that higher refund is because their withholdings changed. So let me back up a little bit. Let's just think about what a refund is.
Yeah.
A refund is a return of your own money that you've overpaid during the year.
Yeah.
And the way you overpay is through your withholding. So if you're the average person with W-2 income, you withhold taxes from every paycheck. So every 2 weeks, you get your paycheck, there's tax withholding. If you overpay that, that's when you get a refund. So what was happening with the new tax laws is that in the background, the IRS changed the withholding tables because of the new tax laws. Tax rates were supposed to go down, so they adjusted tables, and they started withholding less from people's paychecks. So now the question is, well, how come nobody noticed that? Well, let's say the average person is pricing, I don't know, like I think I've seen a couple of people who had $1,000 less than they expected. Well, you divide 1,000 by 26 pay periods. It's about between $30 and $40 per pay period, right? Mm-hmm. A lot of people didn't see that difference, didn't feel it, taking it home because maybe their health insurance deduction went up. Maybe they contributed more to their retirement, and so they really didn't see that additional take-home pay during the year. But when you come into your taxes and $1,000 is missing, that's when you notice it. And so it was just having to educate people and, look at their W-2s, compare their W-2s from the previous year and say, well, look, your income went up, you got a little raise, you got a little bump, you got something, but your withholdings went down. That's because the tables changed. So you paid less during the year. So don't feel like you lost money or, the government took your money or anything. It's just that you took home a little bit more during the year.
Well, Lydia, isn't that interesting? Stepping back from your role as a CPA, right, and just understanding the psychology of people, I would have thought, wow, I did get a big tax cut if I got a big refund. I did get more money in my paycheck, but it was $30 or $40. So people over time were like, So their attitudes are different if you get it over time or if you get it in one lump check. And you
Absolutely.
made the point earlier, Lydia, and I think that was a great point, where you have to say to people, you understand that a refund is money that you already paid back. You're getting it. You're just getting back your own money. But I just feel like when people get a big check, they somehow think that's free money. Somehow, even though it's their own money they already earned.
Exactly. And so you're absolutely right. I think if nothing else, this new tax law is waking people up to realize, okay, how this really works and opening their eyes and asking the questions and being educated. But yes, you're absolutely right. It is a mindset. It's a mindset that needs to be changed. People need to understand what a refund is. I mean, just think of the term refund. What is a refund? When you go into a store, you are returning something you bought and they're refunding you your money.
Yeah.
And so that's what it is with, the taxes. It's a refund. They're returning back your money that you've overpaid during the year. And you basically let the government hold that money interest-free, and you're just getting it back. And you're right, it's absolutely a mindset because some people just think of it as a savings.
Right.
It's money that they wouldn't otherwise save during the year. And so for them, it's, that time, it's like, okay, somebody hold this. I don't want access to it. and then I'll just get it come spring and pay my property taxes, schedule vacations, pay for my children's summer camp. So yes, it is a mindset, and I think it's just something that we need to update. We need to do better financial planning overall, including the tax planning within the overall financial planning, and just understanding that exactly what a refund is. It's just money that's being returned to you. So I often joke around with my clients, and I say, you know what? How about you pay me that extra money during the year, and I'll give it back to you interest-free come April. And when you say it like that, it's kind of like, okay, I get it.
They get it, but Lydia, you nailed it, because I have friends that say, well, if you just gave it to me, I'd spend it. So I don't mind that somebody's holding it for me, and then I get it back, and then I get to buy a new mattress or go on vacation or something like that. So we've trained ourselves. So ironically, if you're a politician and you thought that your constituents would really love the fact that you cut their taxes, therefore they got more in their paycheck, less refund, some of them aren't happy with it.
Exactly.
Founder and owner of Desnoyers CPA, Lydia Desnoyers. Lydia, thanks very much. Appreciate your perspective in all of this.
My pleasure. Have a great day.